Hi, my name is Darren Joseph from Tax, and here's a clip from a live Q&A session we did on tax and investment for U.S. exposed persons at the American Chamber of Commerce. This was on September 4th, 2023. And we did this together with John Shoemaker. He's a partner at a U.S. tax law firm called Butler Snow in Singapore, and with Paul DeVierno, the strategist and fund manager at UOB Kay Hian. Enjoy.
When a person utilizes a foreign income exclusion and has investments in a US-based account, like Vanguard, Schwab, whatever, can they use their standard deduction to offset some of the potential taxes when harvesting gains? Okay, so just looking at this, my thinking is that the standard deduction will come afterwards. So therefore, if there was, it will reduce your taxable income by the amount of the standard deduction. And then if there's a gain, capital gains are tax-free up to 14K. So you have that playing for you, plus you have the standard deduction. So my thinking is, yes, it would reduce your tax exposure, John.
Yeah, I'm not sure I understand what they're trying to get at with the question. You don't need to use it within a tax-deferred vehicle because you're not going to be subject to tax on that liability until the future. Are they saying, can you get rid of it in the immediate and then not have it in the outturn? Well, no, that's not how that works. But you're not going to have a liability anyway in the outturn. You're going to use it in the out years when you do start to process this.
Maybe the better way to say it is just do a simple example, and you guys can stop me. Let's say you live overseas and you only earn $50,000 a year.
Correct.
So your foreign income exclusion
Wipes
out that 50. But you have a bank account in the U.S. with $300,000 in it. And that $300,000, since interest rates are better, you had it on a CD, so you had $10,000 in interest.
Mm-hmm.
The standard deduction will go against that $10,000 in interest. The standard deduction for a single filer this year is
12.
12, and you owe no taxes.
Right.
So that's the way it works.
The idea with the brokerage accounts being able to step up your basis, to reset the basis and go ahead and have a taxable event. In fact, encourage the IRS to create the taxable event, but then you use your standard deduction to offset that. Or things like child tax credits, which what often happens with teachers, and that's what colleague here, what often happens with teachers is we have zero tax liability because we're below the foreign income exclusion. But there are some opportunities out there for us to harvest or use child tax credits, the non-refundable ones, to create these taxable events.
Now, the two things to watch out for, though, are transaction fees and market volatility.
Yeah.
So, just don't try to be too clever. You don't want this an opportunity, and I agree. I think there's an opportunity there. The problem is there's a lot of complexity involved in transaction fees and market volatility. So if you have a transaction fee that's associated with that trade, that's going to reduce the amount you save. If and maybe you're moving out of 10 positions. 9 of them are fairly stable market, but that one hits and now you've lost value and at a transaction fee, you could see the entire tax savings overwhelmed. And so you just want to be careful. It depends on the amount at stake, and you don't want to spend all this time and effort for $50 worth of tax savings or a negative consequence because you're a little bit too aggressive.
Right. Of course, actually, the robo-advisors in the U.S. will do it for you for $50 of savings, as they have an algorithm that figures it out. And just to give you an idea of what the robo-advisor would do, kind of gives you thinking. Let's say you own the S&P SPDR ETF, the SPY, right? Now, if you just sell and immediately buy back that SPDR, that doesn't count. But the SPDR is identical to the Vanguard, help me out over there, guys. What's that? What's the Vanguard one? The VOO?
Or VOO's ETF.
Yeah, the VOO, right? So the SPY is, so if you sold your SPY and just simultaneously bought the VOO, you wouldn't be taking any of that market risk that John's worried about, and you would have realized that gain, and you would have stepped up your basis. And I would put that in the very clever category of financial thinking. You would be, I hate to say it, but compared to most of the people in the financial industry, you're way ahead of them.
Okay. Well done, guys. Yeah.
So if you're a 6, 7, or 8-figure investor, entrepreneur, or business owner who needs a tailor-made solution from a qualified team of professionals, we can help you achieve the international lifestyle, the freedom, and even the tax savings you're looking for. Visit us at htj.tax and live that international life.